Hello, people. Welcome once again to this channel. And this is a continuation from our previous discussion identifying Forex chart patterns. And we are actually looking at some continuation patterns. During the last discussion, we talked about the asymmetrical patterns, asymmetrical bullish pattern, asymmetrical bearish pattern. Was are the two we looked at. And if you are on our group, you would see that we spotted this pattern. We spotted a bullish symmetrical triangle. We spotted this today. Yeah, it happened to them yesterday. We spotted it yesterday, and it actually took flight today, and we made some good profit. We spotted this on the Great Britain pounds against the US dollar. So it's very important that you study this video very well. Once you see these things, they actually play out in the market, and you stand a chance to get a good deal, to get a good profit when you see them. So quickly, I hope you've seen my previous video. If you haven't, you can go back and watch these videos so you can understand these various patterns. They always happen. They always repeat themselves. Forex is all about historic happenings, what happens before now. And once you see them happening again, you're sure the pattern is about to play out. So great. So we'll be continuing from that previous discussion. Now, this time around, we'll be looking at two triangles, which is the ascending triangle and the descending triangle. Now, ascending triangle, remember, when price is going up, it is an uptrend. So when you say something is ascending, it is going up. So an ascending triangle signifies a bullish continuation move, while the descending triangle signifies a bearish continuation move. So quickly, I'll try to explain this to you, starting off with the ascending triangle, and then we'll look at a live chart that was taken on a screenshot, try to explain better, then we'll move on. And then just with these two, let me not bore you with all the plenty talk. So great. So let's go ahead. So basically, this happens in an uptrend, as I said. So price is moving in an uptrend, and then price action comes all the way and meets this first resistance, this resistance zone, which is the horizontal resistance. Remember, we have the resistance that can be either on the trend line, diagonal line, support and resistance can either be support and resistance can either be on a trend line, or it can be on a horizontal pattern. So in this case, the resistance is on an horizontal line. So what happens? So price comes and meets this horizontal resistance for the return, and this serves as the resistance for the rest of this pattern formation. So after price hits this resistance zone, price goes down, and then it hits this support on the trend line. It hits this support, and what happens again afterwards? Price goes all the way up, hits the same resistance, and comes down and hits that same trend line. So at this point, if this had happened, you could have easily drawn this. Let's assume this hasn't happened. You could have easily drawn this line and also draw this line, this two touch, and you see that they both connect, and you have yourself a triangle. So when that happens, remember on the second touch, you notice that the second touch is actually higher than the previous touch. So you have a higher low compared to the, remember this was the previous low, but this low point is higher than the previous low. Now this is going to be the lowest point of this formation. This is the lowest point of this formation. So remember, once you have this 1, 2, 3, 4 touch, you mark it up and you see that you have yourself a triangle. So great. So we were here after the fourth touch. After this touch, price bounces all the way up again, and what happens? Price breaks through. Price breaks through at this point. This is the point where you confirm that the triangle has been broken out. The formation is now complete. Price breaks out of the triangle, and what happens? usually it comes for a retest of the broken resistance. Remember, we talked about resistance, we talked about trading resistance, we talked about break and retest, we talked about bounce. Now, basically, this is where you have a break and a retest, and then boom. But most times, sometimes, rarely, price doesn't come back for a retest. But wait till you see a very clear breakout from the triangle, and then you go in for a buy and go in at the retest at this zone, or after the retest, you buy, and then boom. Remember, ascending triangle happens in a bullish market, so you're looking at going bullish, looking at buying. So some other gist you should know about this formation during these breakouts, you should have at least 4 touches of the triangle that would validate the pattern. 4 touches of the triangle. Remember, I have 1, 2, 3, 4. A minimum. You can also have another touch here. This could have probably come down here and then goes back up and breaks out. So you can actually have 6 touches before the breakout happen, but it's a minimum of 4 touches. That is what validates this pattern. So when you go long, when you buy at this point, how do you set your take profit or your stop loss? So once you buy, measure the move, measure the move from this first touch on this resistance to the previous to the support. Measure this move and your pip count. For example, if the difference between this price at this point and price at this point was 100 pips, was 50 pips. Now you set your take profit also as 50 pips. Let it be a measure, this measured move, the difference between this and this should be your take profit. Now, how do you set your stop loss? Either you set your stop loss below the broken resistance, which now serves as a support. Remember, resistance turns to support when they are broken. So in this case, resistance was broken and it is now a support. So you set your stop loss below the broken resistance, or you can set it at the last touch of this trend line. So you can set your stop loss here as well, because you're sure it is not coming back here. If price is coming back down, it's only going to form another low that is higher than the previous low. So you can set it at this low, because if it comes down and hits it, it means the pattern is not valid. If it goes lower than this, it means it probably will continue going down. So guys, that is how to trade the ascending triangle pattern. Ascending triangle pattern, very easy. Once you spot it, do not dull it. Ensure you wait for a breakout and a retest. Or at times you can see a breakout with an engulfing candle, and price might not come back for a retest. But it's good to be conservative. Do not rush a trade. Wait for the setup, and then when it comes to you, take it. So let's look at the next slide, which we'll see what it actually looks like on the live chart. Great. You can see this was a screenshot taken on the US dollar against the Swiss francs. What happened? Price came all the way, so the way we explained, it found its first resistance on this horizontal resistance line, and price came all the way down, hit our trend line, which is a support. Price went up this hit this it didn't come up to the resistance at this point, but it came down, still touched the support and went up, touched the resistance, came down a bit, touched the resistance again, and the third time it broke out. So how many touches do we have here? 1, 2, 3, 4, 5. So this is a valid formation, a valid ascending triangle formation. And what happened? Price went all the way and broke out. And unfortunately, this didn't come back for a retest, but you could have gotten in when you saw this very bullish breakout. The price went all the way up. You could have bought at this pullback at this point and measure the move. Now, the difference between this point and this point, you can use that as your take profit, and you would have hit your take profit long before all of this happened. And set your stop loss below the broken resistance, or at the other points, at the points in which the other touch happened on the support zone. So guys, that's it for ascending triangle pattern. Not wasting much time, we'll look at the next one, which is a descending triangle pattern. So the same way we have the ascending triangle pattern is the same way we have the descending triangle pattern. It is just the reverse. The descending triangle pattern happens in a downtrend. It happens in a downtrend when price is coming down. It is a continuation that price is going to, it's a confirmation that price will continue going down. So I don't think I'll do much explanation because it's about the same thing. I'll try to do an explanation though. So price comes all the way down. It finds these supports and boom, it bounces off the supports. And now this is going to be the support for the whole of the formation before it breaks out this zone. So it touches this support first, goes up, hits the trend line resistance, and comes back down to the same support with the same support holds, and it goes back and forms a high that is lower than the previous high. So you have a lower high. Now at this point, if all of this hadn't happened, bring your trend line. Remember, I've taught you how to draw your trend line. If you haven't seen it, go to my channel, look at all other videos, and you see the video where I talked about trend line. It's all on my channel. So you draw your trend line and you draw your horizontal line, you see where they meet, and you see that you have yourself a triangular pattern. So what do you have to do? You wait. At this touch, price likely go down and break out. But it's not the minimum, just like the same thing I said in the previous ascending triangle. The minimum touch you need to have is 4. So in this case, we had 1, 2, 3, 4, and boom, the breakout. So you can have 1, 2, 3, 4, 5, and have 6, and then boom, the breakout. So you can have that. You can have 6 touches before the breakout. But the minimum you need to have for a valid formation is 4. That's the minimum you need to have for you to ensure you have that pattern playing out. So this is it. You wait for the breakout to happen. Once the breakout happens, you wait. You see a good retest of the broken supports, and then you go boom. You sell. You sell and you measure the move. Remember, for setting your take profit and setting your stop loss, you can measure this move. The difference between this point, the first touch and the second touch in the pattern, measure this move. Now the difference in the pip count, you can use it as your take profit count and set your stop loss either above the broken support zone or on the previous, on the last touch on the support. Because you're sure it's not coming. If it's coming back, it's going to do a lower high before it keeps going. So you're sure it won't come back here. So you can set your take profits here, and boom. You can either use a measured move for your take profits, or you set a high take profit and you keep trailing your profits. You know what we mean by trailing? Secure the bag. I talked about it in one of my videos. When price moves, you keep moving your take profits into your stop loss into profits. Keep moving your stop loss into profits. At every 50 pips movement, you bring your stop loss into 30 pips profits. So that's how you trail your trade. You trade it with a stop loss. Keep putting your stop loss in profits. So guys, that's it for descending triangle. So let's look at the live chart. What happened? Great. This is an example of the US dollar against the Japanese yen. So price came down. We'll talk about this some other time. This M formation is a great sign for a price reversal. So price was coming down. Price finds this support zone. Price goes all the way up, touches this resistance on the trend line, comes back down, touches the support, bounces off, touches our resistance trend line. And what happens? Price breaks out aggressively, and boom, boom, boom. Price goes all the way down. So you can see how many touches we have here. We had 1, 2, 3, 4. Valid formation, and then it goes all the way down. So that's it. Remember, you can measure the move, the first touch at this point and this point. You can measure it, do your pip count. If it's about 100 pips, also set, when you enter the trade, set 100 pips, take profit. If it is 50 pips, set your take profit as 50 pips, or you can decide to just leave it to run and trail your profit. Trail your profit with keep moving your stop loss into profit. So great, guys, that's it. I hope we'll continue some other time. I'm going to give you some more videos. If you enjoyed this video, kindly hit the like button. And remember to subscribe, remember to share, invite your friends that you know they are interested in learning Forex. And I promise to continue giving you good value. If you're interested in joining our group on Telegram, hit me up. We've been making a lot of calls on our channel on Telegram, and we've been making money. We came out at the top this week. We came out with some very good profits. The team is doing well. The team is doing well, and I appreciate the overwhelming support I've been getting from everybody here. The promotions, the eulogies. It's great. Thank you. So together, I believe we can all do this, because I've been seeing some people on the group that are actually asking some very interesting questions. Some people are already giving analysis. Some people have started from me right from the first video. I'm excited that people are learning. I'm really excited that people, and I want this team to grow together. I want this team to grow together. So if you're interested in joining the group, kindly join me. So we'll talk about all of this. We could give some analysis together. So if let me quickly give you a homework. I don't care what day or what time you see this. Today is 29th of May 2020. If you see this later on, or if you're lucky enough to catch this right now, you can go to US dollar against the Canadian dollar. Look at your daily time frame. Now, it's very important I mention that you can find these formations in all time frames. Well, basically between medium and higher time frames. You can find them in H1, H4. You can also find them in the daily time frame. So go to US dollar against the Canadian dollar, go to daily time frame. You will see a descending triangle formation forming. Now, price has broken out from that triangle, from the support zone, and price looks like it's going for a retest. Now you can do that, chat it up, and on your own. If you're in our group, send it to the group. Let's all analyze it together. So guys, I think I have to end it here. This was supposed to be a very short video. So thank you very much. Remember, like and subscribe. Thank you. Stay safe.